You are listening to Uranium Spotlight on Tuesday, June 11, 2024. Brought to you by PurePoint Uranium Group, your exploration partner in Canada's Athabasca Basin. PurePoint has commenced a 5,000-meter drill program at Turner Lake, a project surrounded by extensive exploration from industry leaders and on trend with the highest uranium-grade deposit in the world. And now your host, Chris Frostad.
This week on Uranium Spotlight, we review the U.S. EIA's annual marketing report, new demands in Australia for nuclear power, India's monumental nuclear objectives, and heightened exploration activity in Canada's north. Last week, the uranium spot price continued to drift down, off $3.75 to close the week at $86 per pound U3O8. Last week's uranium market dynamics exhibited a notable slowdown in the spot market activity while participants attended the WNFM's 50th annual meeting in Atlanta, Georgia. Despite a bustling schedule filled with discussions and networking, the spot uranium market witnessed minimal transactions, with prices slightly retracing as the week progressed. The week opened with the daily spot price indicator at $89.75 a pound, but by Tuesday it had edged down to $89.55. The downward trend continued, marked by the week's first deal on Wednesday at $87 a pound for a Cameco delivery, closing the day at $87.55. Despite no transactions on Thursday, the price indicator dipped further to $87.25. However, Friday saw a resurgence in market activity as traders returned to their desks, culminating in several transactions, including a final trade at $84.25 a pound for a prompt delivery at Coverdine. Overall, the spot market closed with 6 transactions totaling over 650,000 pounds of U3O8, indicating a robust pickup in volume towards week's end. Conversely, the term market remained subdued with no significant new contracts or utility demands. Utilities continue to engage in off-market discussions, suggesting potential activity in the forthcoming weeks. As investors and market observers look ahead, the downward pressure on spot prices and the quiet but potentially stirring term market present a complex landscape for stakeholders in the uranium equities and commodities markets. The U.S. Energy Information Administration recently released its annual uranium marketing report. In 2023, U.S. civilian nuclear power reactor operators purchased 51.6 million pounds of uranium concentrate at an average price of $43.80 per pound. This marked a 27% increase from the previous year's 40.5 million pounds, with a 12% rise in average price compared to 2022's $39.08 per pound. Canada emerged as the top source for U.S. uranium in 2023, accounting for 27% of deliveries, followed by Kazakhstan and Australia at 22% each. Russia supplied 12% of the uranium, Uzbekistan 10%, and domestic sources contributed 5%. Notably, the ban on purchasing Russian uranium without a waiver from the Department of Energy could pose challenges for utilities as they seek alternatives to replace this 12% supply. In 2023, 15% of total uranium purchases were made through spot market contracts, averaging $51.64 per pound, while 85% were acquired via long-term contracts at $42.42 per pound. Spot contracts involve one-time deliveries completed within a year, while long-term contracts span multiple deliveries, typically beginning a year after signing. 26 reactor operators signed new purchase contracts in 2023 for 5.5 million pounds of uranium, averaging $61.93 per pound. Looking ahead to 2024 to 2033, the report indicates unfulfilled deliveries of 184 million pounds and a maximum potential request of 249 million pounds under existing contracts. This suggests a total anticipated market demand of 433 million pounds over the next decade. Australia boasts the world's largest uranium reserves, yet its stance on nuclear power remains restrictive. Despite ample resources and economic stability, the government limits reactors to research facilities, prohibiting their use for power generation. This contrasts sharply with the nation's heavy reliance on coal and natural gas, major contributors to climate change with hazardous extraction processes. Recent polling indicates a shifting attitude, with 60% of Australians supporting nuclear power to combat climate change. Even the opposition Liberals are advocating for small modular reactors, citing their safety and cost-effectiveness. They've identified potential sites for development, positioning themselves favorably for the coming 2025 election. However, the current Labour government remains staunchly opposed, risking electoral consequences. Polls attribute Australia's continued fossil fuel dependence to governmental inaction and perceived technological limitations, despite examples like France, where nuclear power drives a clean energy sector. To bridge this gap, governments can invest in innovative projects, facilitating a transition to cleaner energy sources and mitigating climate change effects. Taking a look at India's burgeoning nuclear sector, NTPC, India's premier power supplier, traditionally reliant on fossil fuels, is eyeing a significant expansion into nuclear energy. Their ambitious goal: doubling India's nuclear power output within the next decade, which translates to the construction of at least 10 reactors, if not more. Already identifying sites, NTPC has established a dedicated subsidiary to spearhead this endeavor. The projected cost? A staggering $18 billion US, spread over the next 10 years. However, NTPC isn't just thinking conventionally. They're exploring innovative approaches, including small modular reactors, which could potentially drive down costs significantly. To put things into perspective, recent U.S. reactor projects, each comprising 2 large reactors, racked up a bill of $35 billion. Even though the $18 billion estimate for India's reactors is just that, an estimate, it underscores India's remarkable efficiency. Despite the possibility of costs exceeding projections, India is demonstrating remarkable ability to construct reactors swiftly and economically, outpacing the U.S. in both speed and cost efficiency. This commitment stems from India's recognition of nuclear energy's crucial role in combating climate change, driving the government to go the extra mile in facilitating nuclear development. Exploration drilling in Canada's Athabasca Basin is intensifying as multiple companies aim to discover new uranium deposits to meet the growing nuclear energy demand. Recent press releases highlight the significant strides made by PurePoint Uranium Group, ISO Energy Limited, Athabasca Uranium, and Standard Uranium Limited in their respective drilling programs. PurePoint Uranium Group has commenced a strategic drill program at its Turner Lake project, targeting the Laroque Structural Corridor. This corridor, known for hosting high-grade uranium deposits, is being explored with a focused approach involving approximately 5,000 meters of helicopter-supported diamond drilling. Scott Frosted, VP of Exploration, emphasized the potential for substantial uranium mineralization along this prolific geological feature. ISO Energy Limited has initiated a 30-hole summer exploration program along its Laroque East and East Rim projects. The program aims to follow up on positive winter drilling results and refine exploration targets along the Laroque East corridor using advanced geophysical surveys. CEO Phil Williams expressed optimism about discovering new mineralization pods along the strike of the high-grade Hurricane deposit. Athabasca Uranium reported encouraging results from its winter drill program at the Geikie and Moon Lake South projects. At Geikie, extensive hydrothermal alteration and structural features associated with gravity anomalies suggest a large-scale uranium system. The Moon Lake South project, operated by Denison Mines Corp., continues to reveal additional uranium mineralization along the CR3 corridor, indicating significant exploration potential. Standard Uranium Limited completed its inaugural drill program at the Canary project, intersecting localized anomalous radioactivity and hydrothermal alteration. The project, under an option agreement with Mamba Exploration Limited, showed promising early results, positioning it for further exploration in subsequent phases. These concerted efforts in the Athabasca Basin underscore the region's importance in the global uranium supply chain, with companies striving to uncover the next generation of high-grade uranium deposits to support the expanding nuclear energy sector. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with some of the largest uranium suppliers worldwide. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, Our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.